Today on this 18 Hour special, let me welcome on board a very special guest as well, who perhaps would have a better ear to the ground to try and understand the consumer patterns. We're almost 2 years into the pandemic, and who better than Sunil Souza, the MD and CEO of Tata Consumer Products, to throw some highlight on how the consumer is reacting now that you are well into the pandemic, with things actually now beginning to settle down. Yes, there is talk about a third wave, but that doesn't seem to have made its onset. Fingers crossed at that. So let me welcome Sunil on board. Sunil, hi, great to have you today on ET Now. Thanks for taking the time out. Sunil, macro indicators pointing up, so are stock markets. But how are business or other things looking at your end?
Post the first lockdown, things started coming back and things started coming back strongly. And then we entered into, I think, the whole country as overall, this thing grew a bit complacent, if I may. And then we had the second wave hit us. Second wave was, I would say, hit home very hard in terms of employees, partners, hitting our supply chains, etc., etc. So the good news is, I think now, given the vaccination rates, given the way people, have started exercising caution, etc., I think that second wave is well behind us. And we are seeing month-on-month recovery coming through. Whether it is in the packaged businesses that we do or even in the out-of-home businesses that we do. In the packaged businesses, I think most importantly, we've got stability right now, and stability across a range of parameters, because during the lockdowns, especially the second lockdown, we had so much uncertainty, different geographies doing different things, different times for store openings, different days for store openings. Like I said, we were impacted across the supply chain in terms of our logistics partners, distribution partners, the salesmen, etc. I think now everything has settled back and come to normal. That's number one. Number two, we would see consumer confidence coming back. I think the second lockdown was probably the bottom of consumer confidence. From there on, I think from month on month, we are seeing that at least in the businesses that we do, we are seeing month-on-month improvement. And consumers are feeling, I think, much more confident of the future as they go by. And a lot of that we are seeing in our out-of-home businesses when consumers are walking out, are starting to spend. So we've got two businesses out there, Narishco, which is a ready-to-drink business, and the Starbucks joint venture that we run. In both those businesses, I think business is coming back to close to pre-pandemic levels, if I may. So from that perspective, we see in a good space. The other pieces, you would hear a lot of noise about inflation, things like that. But for us, actually, we are on the reverse curve because a significant portion of our business is tea. And after the first lockdown, we had seen tea prices spike up. Actually, this period last year was probably the peak of prices. From there on, we've seen a steady decline. And now tea prices are starting to more or less normalize. They're still above where they were pre-pandemic, but not the peaks that we had hit last year. So for us, inflation overall as a company is in the reverse direction, albeit we are seeing stress on packaging, freight, etc., lower components, and the team is trying to figure out ways to tackle this. We remain confident that given the fact that we have improved our execution significantly, whether it is in terms of distribution, whether it is in terms of new products going out, all those setting our new footprints in place, or the fact that we are strengthening our brands, we are significantly spending above where we were last year in terms of brand building or overall building capability for the organization. I think we are in a pretty good place. So as things come back, I think Tata Consumer is in a strong position to bounce back very strongly.
Sunil, I must say you're an interviewer's delight. I wanted to address the elephant in the room. That's the price uptake in tea prices in just a bit, but you already addressed that concern. So let me pick up on that point that you just mentioned on the inflation in tea prices. What is the impact on margins that we can expect? Because I'm sure it's going to eat into some.
So here's the thing. I am not a great forecaster of the future. I think we are particularly good at reading trends for here and now and broadly seeing what's coming around in the corner, but not too far ahead. Because you've seen those bumps, ups and downs as we go by. So last year, after the lockdown, we had, tea plucking didn't happen. So the demand supply equation got disrupted, and tea prices September last year was about 70 to 80% above September 2019. That's how much the inflation went through. After that, when things got normalized, we saw tea prices coming down. When the second lockdown happened, again around June, we saw a spike back because people were scared that what happened in the first lockdown will happen again. But once things normalized, I think now we are seeing a gradual trending down and stabilization. We are actually entering peak plucking season, if I may. So compared to last year, same time, we're seeing tea prices which are about 30% below last year. Now, that said, the other side of the story when you talk about margins is that margins is a function of cost and the price that you sell it. Now, cost, we knew what happened to the tea, but price is also a function of when you take price, you've got to make sure that you're taking into account what is the competitor doing, how much is the consumer elasticity of demand, and most importantly, if you are a business with momentum, what will pricing do to your business momentum? So it's always a fine balance. So over a period of time, we had not taken all the cost and translated that into price. I would say we translated about 75%. Now, as the curve on cost starts coming down and our price is there, I mean, margins will improve. You already saw the improvement in Q1 versus Q4 of last year. I think now on a quarter-to-quarter basis, you will start seeing margins coming back. I do think by Q4 of this year, you would see a broadly normalized margin for the business.
I'm so glad that you could share such in-depth insight on that. So what is the next course of action really at Tata Consumer, Sunil? Is it going to be focusing on improving your margins or would it be volume growth?
So I don't think it's a question of or, it is a question of and, right? Now, you have to remember the reason why Tata Consumer was formed was to make sure that we fulfill the aspirations of the Tata Group in the FMCG space. And therefore, the mandate for growth is very much out there. And growth is both organic as well as inorganic. Now, we remain committed to delivering double-digit top lines as we go forward. But remember, and the reason I say it's an and, because only delivering top line is not good enough. From an overall building a valuable company for the future, I think your bottom line is also important. So towards that, you will see us taking 2, 3, 4 very, very tangible actions. Number one is portfolio growth. Number two is strengthening our brands, because ultimately the consumer pays for brands and not just for a product per se. So when we strengthen our brands, we create more valuable brands and therefore build pricing power. We are very, very focused on market share, because market share again is a function of how strong you are in the market. And most importantly, costs. I think we were very, very focused on deriving synergies from the merger so far, but more or less, I think those big synergies are behind us, and we've already flown them through, or rather derived them, some of which we have flown them to the bottom line, some of which we have redeployed for growth. But more than that, going forward, I think you'll see a very, very tight focus on cost. So strong top line growth driven by portfolio, by mix, by pricing power, market share, strong costs, which then translate into the bottom line. That's what we'll be focused on. That said, it is not a straight line graph. I like to call this as a snake in a pipe. Directionally, it is in the upward direction. There will be a bit of ups and downs from time to time. We've just got to take it in our stride, remain focused on execution, and make sure we deliver medium, long term, short term, medium, and long term together.
You know, I feel especially with the product portfolio such as yours, I mean, there is no taking away from the fact that you might curb other expenditures in the time of the pandemic, but everyone's going to use the products that you have to offer. The other big industry player, that's Unilever, highlighted as to how they're gaining market share. Wanted to understand your thoughts on market share, how you plan to go about increasing the same, and would you say that the large delta is really coming in from the shift from unorganized to the organized sector?
So first I'll talk about the overall industry per se. I think anywhere from 30 to 40% of tea is, and if I take tea for example, I mean tea, 30 to 40% of tea in this country is still unbranded. And as consumer incomes go up, disposable income goes up, you will see that gradual shift happening from unbranded to branded. So that's one place where you will see volumes and share going up. But more importantly, within the branded play itself, I think Tata Consumer, we've got an opportunity to increase market share. There are 2-3 tangible ways we're going to do it. So before we started this entire integration, we were covering only about 500,000 outlets directly. We had put out a target saying we will cover 1 million outlets, or we will double our direct reach in 12 months, and we will double our indirect reach in 36 months, the total numeric reach. Glad to say that we are already on track to deliver the doubling in 12 months. So end of September, we will be north of 1 million outlets covering directly, which my salesman actually goes to the outlet. Important, because then he's able to execute the entire portfolio in that outlet. So that's number one. And that is already showing in the numeric reach. We moved from about 2 million outlets when we started total to about 2.5, 2.6 million outlets now. So that needle is beginning to shift. So we are available in more outlets, which means market share. That's number one. Number two is when you look at our brands, we do think that we needed to power our brands a little more than what we were doing earlier. And we've already started doing that. So last quarter compared to the same quarter, so that's Q1 this year versus Q1 last year, my A&P expenses in India, which is advertising and promotion, has gone up by 50%. And you will see that going in, because that is creating consumer pull. We will continue to do that. Lastly, we need to continue to excite the consumer and bring in more innovation and put them in front, so that then we start gaining share from other adjacent products that are there in the market. So of late, we've had a series of launches. The most recent being, we've launched Chakra Care, which is our product in the south. And we've launched Gold Care, which is our product with 5 herbs and this thing to enhance immunity and build health benefits. And we're already seeing traction for that going across. So distribution, brand equity, innovation, all the 3 pieces need to fire. And we do think that, I mean, we are gaining share from branded players as well. And this is borne out by the Nielsen numbers. Early days, we need to stay the course to start to make significant difference going forward.
Sure. Let's talk about your individual products. Tata Sampann, the range of products, that's priced significantly higher than, say, the other brands in the same category which are available at e-commerce platforms or other brick and mortar, establishments as well. Is the high pricing of the range of products really a deterrent? And why the high pricing?
So here's the thing. I mean, like I said earlier, it is not only about volume, it is about volume at the right margin, right? But to do that, I think the critical piece is to make sure that you are providing the consumer a good price value equation. And to provide that price value equation, our products have to be differentiated versus competition. So just for example, the dals that we sell, right? I mean, very clearly, we are into unpolished dals, which is actually the best form of dal to be consumed in terms of the overall nutrition level. And therefore, we do think that we can command a bit of premium for that. I mean, our quality levels are top-notch, bar none, and unpolished, along with the backing of the trust of the Tata name, if I may call it. And we're very comfortable with that. Or if you take spices, the quality of our spices is up there. I mean, I can tinker around with the quality to drop prices, but I would rather provide high quality, right price products to the consumer. And you know what? The Indian consumer is responding. I mean, we are seeing very good traction on our Sampann portfolio.
I've always wondered as to why organic food such as yours is more expensive than the chemically treated ones, but that's a debate and a discussion for some other day. As of FY21, and please correct me if my stats are wrong here, the share of your ready-to-eat products was at 5%. Given that more so during the pandemic and stay at home, there is more an increased focus on ready-to-eat products. How is it that you're looking to diversify this portfolio of yours?
So there is a range of changes in consumer behavior during the pandemic, I think, which we need to take advantage going forward. So whether it is online media consumption, online commerce, whether it is ready-to-eat products with convenience, whether it is the rise of the Kirana store and the consumer going more to the Kirana store, there's a whole bunch of trends which have changed significantly, or which have changed significantly in the past 18 months or so, and we need to take advantage of that. Convenience is a huge factor now, which we are seeing. And as part of that, we are looking at expanding our whole portfolio. The only thing is when you expand the portfolio, we are making sure that we are not launching Me Too products per se and just playing the game, but making sure that we're launching products which are significantly differentiated. For example, when we've launched, this is slightly in the past, the khichdi with the five different combinations, dal's khichdi, or we've launched the Rava dosa or the Rava idli. It's not the plain and simple idli. People do know the ragi idli, the advantages of millets, etc. So that's number one. That's the organic pieces. In the inorganic pieces, in the whole food space, we realized as a company, if you looked internally, we had a gap in Sampan is a great brand for us, playing in the pantry, in the kitchen. But we had a gap looking outside when you look at on the table, on the go, as I call it. I mean, whether it is eating in home or on the go outside. And therefore, we did this inorganic move with Soulfull. The reason we bought Soulfull is a great brand per se, built very strongly in geographies which they operate. Millets, the ancient Indian grains adapted to the consumer of today. And they had pretty good equity and market shares in the geographies which they operated, albeit there was huge opportunity to expand it out. So that was one reason we bought it. But more importantly, we also looked at it because of the fantastic product pipeline that they had. They mastered how to treat millets and produce great products out of millets. And that being a healthier option going forward, if we get it into the right formats in front of the consumer, we do think we've got a winning proposition. So both organically as inorganically, we are moving in the direction of taking advantage of this trend of consumers of moving to convenience and more ready-to-eat sort of products.
Interesting. Wanted to also understand, Sunil, what is the e-com sales currently as a percentage of your total revenue pie, and how is it that you see Big Basket further accelerate this? And more so at a time when there is so much stiff competition, everything from an Amazon to a Swiggy to a Zomato, and I can go on with the list. Everyone's offering Insta deliveries.
So when you say e-commerce, I would presume it's a loose term for online purchases. So therefore, if I then dissect it, the way we are playing e-commerce is online is in three distinct buckets, if I may. So first, obviously for scale, you have to play the platforms, the Amazon, the Swiggy, the Flipkart, the Grofers, the Big Basket that you mentioned. That is one piece, and we are playing that. Second piece is there are certain brands which will appeal to only specific consumers in specific geographies, and what online gives you the advantage of targeting what I call a target segment of one. You can target an individual consumer basis the profile, and therefore launch products dedicated to them. So we've already started out on that journey. We've got now 3 products in the basket. We've got Tata Coffee Sonnets, which is micro lots coffee. We've got Tata 1868, which is a range of curated teas, and 8 o'clock coffee, which is the number 4 brand from the US, so American coffee, which is D2C. It is available on the website, delivered to you directly at home. So it gives us the ability not to scatter our resources all over the place, to do focused, targeted execution. The last piece is we've got our flagship store, if I may call it, Nutri Corner, which we've launched in Delhi and Mumbai. We're still about perfecting that whole piece, and once we perfect that, we will launch it across. So we are playing all these 3 pieces. Now, just in terms of percentages, when we started just before the pandemic, the e-commerce sales was about 2.5% of our total. We exited March at about 5%. We've exited June at about 7%, and we're continuing to go from strength to strength. So this whole move from offline or to more omni-channel shopping is something that is real, something that is here to stay, and we will play the game in all these 3 pieces. As regards Big Basket is an acquisition by Tata Sons, which is our parent company, and we will work closely with them to figure out what are the synergies that we can realize.
So what's the progress on the much talked about Tata Super app? Or am I not allowed to ask that?
That is something which I think you should ask the Tata Sons group. All that I can tell you is whatever happens on the Tata Super app, Tata Consumer will be a very active player on there.
Yeah, absolutely, which is why I asked you. It's been a couple of quarters since you acquired the Soulfull brand, which you also earlier alluded to. Have you started the synergy benefits already? What's the outlook for the brand?
So, like I said, the reason why we acquired Soulfull, we saw a great brand for us to play on the table, on the go, beyond Tata Sampann, building out our entire foods portfolio per se. Healthy, in line with trends, ancient Indian grains, customized to the consumer of today, great appeal for kids in a nutritious way. And we saw an opportunity if we added a little bit of fuel both on building the brand as well as expanding distribution. I think we could make magic. The most important thing was we got the founding team to come along with us to help us realize that vision on our journey. We said that we will integrate Soulfull in 100 days. I'm glad to say that it's completely integrated. The entire front end, back end has been completely integrated. From about 15,000 outlets, which they used to service, we are north of 50,000 outlets. So the distribution has already started bearing out. That's one big part of the synergy, right? Being able to derive synergies on the top line. On the back end, we've identified very clearly where the opportunities are in terms of procurement, manufacturing. They're already leveraging the logistics, so we've already deriving synergies there. So all those pieces have been derived, I think. But for Soulfull, more than the synergies, I think it is the growth that we're looking at. I think once we've integrated, we're already seeing the numbers start to move and move significantly. That's number one. But as I mentioned earlier, just beyond the current products which they have, which is breakfast cereals and muesli, I think the whole pipeline which they have is very, very exciting. And our team has already started work on starting to commercialize that pipeline. So I would say at a steady pace, you will see more and more products coming out of the Soulfull basket, if I may, starting to excite the consumer and starting to drive top line still stronger.
Sure. You know, the one thing that we must talk about also, Sunil, is the product overlap that you have with Big Basket's private label and Tata Sampann. How is it that you're addressing this issue?
See, every single retailer everywhere in the world will have private labels as well as selling brands. And there's a specific, I would say, consumer need for each of these products. You've got to be very clear about what you're playing, how you're playing. As I said, I think one of the most important agendas for Tata Consumer per se is to make our brands more relevant to the consumer, both by ways of innovation as well as making sure that we are building brands stronger. Building brands stronger, I talked about putting more advertising money behind it, and we will continue doing that. And that is already translating into market share per se. And then the innovation piece. I think the speed of innovation that you will see us ramping up significantly. I think when we started a year back, we were about 1.7% of sales, innovation to sales. The target is this year, we should be exiting at about 3.5 or so. So from the 14 launches that we did in the second half of last year, the target is to launch 50 new products this year. So retailers, online big platforms will have their private labels. I think the key for us is to make sure that our brands are more exciting, more relevant to the consumers so that we draw our relevant target group into our products.
Sure. I also want to talk about Starbucks because you were in rapid expansion mode for the past 3 years and then it got a little bit into a pause mode because of COVID. What next?
So I would beg to differ on that piece. What we have said is this despite COVID, we have continued to expand number of outlets. In fact, in FY 2021, we added as many outlets as we did in FY 1920, right? No different. And this year, we will continue that momentum. We probably add some more beyond that. So we've expanded geography. We've expanded formats. We are in places like Indore, Bhopal, Jaipur, Lucknow, Zirakpur, Cochin, which we were not there earlier. We've started piloting different sizes of formats to see what appeals. The good part about Starbucks is, I think we've got a strong brand name with Tata Starbucks out there. Both of the names on the table complementing each other, and therefore very strong brand equity. Consumers love the product that are there. Consumers love the different offerings, especially the limited time offerings that come out from time to time per se. And we do think that if you look at beyond Starbucks and look around, I think we've got a window of opportunity with with the competitors stressed a bit. And this is our opportunity to continue expanding our footprint. The good news is, I think we were severely impacted in the first wave because at points in time we were not allowed to operate. But then slowly as the reopening happened, consumers started coming back. In fact, if I remember the numbers right, sometime around March, we were at a 90 index to the previous year. So we had already come back strongly. The second wave did hit us a bit. So we sort of dipped again. But I would say in the last 2 months, we've seen the consumer come back very strongly. We've already starting to see growth beyond where we were pre-pandemic per se. But that's also on the base of expanded stores. But the only part which we have seen is we've seen during the pandemic, especially when there was construction or there were restrictions on store openings and or in the number of people dining in, the team became very creative and we explored all sorts of options to drive our delivery modes. The good news is our delivery, while it is starting to come down as a percentage, is still significantly better than where we were before pandemic. So actually, in fact, at the end of it, we will be better on delivery. We will have expanded our footprint and we would have built better brand strength. So we remain very, very confident of the Starbucks business and we will continue to expand as we go forward.